Hey, what's up, guys? Today's trade during Asia was a long position on MNQ, and I want to get into how we found our short-term bias, why this was our entry, why this was our stop loss, and simply the system that we follow every single trade. And yeah, so let's get into that. But real quick, the cool thing about the system we trade here is that it has a really good risk to reward. For example, yesterday's two trades during Asia were two back-to-back losses. So I lost about 500 on each trade. This one alone was worth about 1,051, which puts us about break even. So that's the power of risk to reward, which is why I like to stick to an average of 2R if I can. Obviously, we get a lot of break evens, we get trolled out, but the full realized TP is always around 2R. It only goes above it if we have very strong signals in the direction of our TP level, right? Today they weren't as strong, so we stuck to 2R, but let's just get into the model. So first things first, we need a liquidity grab. I referenced it right here. This was actually the low of New York. So if we zoom out, there was no trade during New York because the model or there was no real setup and price was actually very tough. But we put in a really good high and then we put in a really good low. And the first thing that Asia does is it continues this downtrend and seeks that sell side. So there's three things that are going to happen around significant levels like previous day low, 1 hour highs and lows, daily levels, 4 hour levels. These significant liquidity grabs tend to give one of three results when you sweep them. So they either get swept and you get a really nice aggressive reversal pattern, something like this. They get swept and then you see a bunch of chop and it's like not very clear where it's going, right? You get a bunch of this. So you just kind of wait it out to see where price is going to go, whether it's going to show bullish price action or bearish. Or you get the sweep and then some type of strong continuation to the downside, right? So obviously this is bullish, this is bearish, and this we don't trade. Simply, I'm looking for one of these three to happen. Either way, I'm just sitting on my hands, right, for a little bit. So we get the grab right here. And even though this price action was not a plus, it was still bullish. Why? Because you have higher highs and higher lows. Again, it's not super directional. It's not a plus, but you can't deny that, or you can't even say that this is bearish, right? At least short term. So what do we have? Our liquidity grab, step one, right here. We have an established trend, step two, which happened after the grab. We got not this beautiful A plus sequence, but still bullish. So now we're looking for an entry model. Now the challenge with today's price action, which actually has to do with it actually is the reason why my entry was a little different than normal. Normally I use a 1 minute inversion for value gap. Today we had to use a 30-second one. I'm going to show you why. But before that, let's get into why. So you see this bullish trend, and then all of a sudden you get really bad price action. I mean, super choppy, no direction, a lot of wicks, and very aggressive sellers, and then aggressive buyers, aggressive sellers, aggressive buyers. So for me, this is hands-off territory. We don't touch this, right? And I also didn't have a good 1 minute fair value gap to work off of for an entry. Obviously, I'm not going to trade this, but if I'm going to, I need a really good confirmation. So what does that look like? So in today's example, you notice here, there's not really a good 1 minute gap. There was this guy, but simply because price action was so bad beforehand, I didn't want to trust this first one. I thought I need at least a second one, but there was no second one. So now we go to the 30-second chart, and you can see that that blue reference I have there is the gap fill of a 30-second fair value gap. Normally, I would take an inversion on the 1 minute chart, which means that my entry should have been right here, right? It should have been, boom, you get the inversion, you mark it in at the next one. We have the same stop loss. I'm going to explain to you why this was our stop loss today and not this swing low. I'll get to that right now. Technically, had I followed the model perfectly, we would have had a better entry. But Again, simply because price action was not a plus, I wasn't willing to take this one, and I didn't want to take this one on the first one. I felt that I would need more confirmation. So on the second inversion, I told myself after the inversion, if we get some expansive sequence, some type of like boom, and then a little bit of displacement to the upside, that I would mark it in. But again, we didn't get that. We got a small pullback after the inversion. Finally, 5 candles back to back on the 1 minute green, creating a break of structure here. You see how we break structure? We have our validated inversion. We have the short-term bullish trend that started back here, and we have our liquidity grab. That's why I marked it in right there, and then simply targeted our 2R level. Now, usually if you've watched our past videos, you know that our stop loss is usually at the last swing low, or it's outside some fair value gaps. Right here in this swing low, usually that's the model stop. But if you look to your left, we have 2 gaps right here. So naturally, I want to protect the trade and put it either right at the gap fills, or if there's like a nice good liquidity or swing low nearby, I will use that too, which I did today. We gave it a couple more points to breathe. That was our actual stop. And good thing we did that, because had we used the model stop again inside the fair value gaps, look where price drew to. Price came to rebalance a little bit of this gap, and that would have tagged us out. So therefore, I got our entry, we got our stop loss, and our take profit level was not based off of any type of liquidity or anything up here. But if you do look on the 5, we had a nice liquidity level here, draw on liquidity. And I figured, you know what, this is a 2R right here at this price, and it's underneath a good draw level. So it makes our TP a little bit higher probability than having it up here, in my opinion. So that's pretty much the basis of our trade. We had our liquidity grab, New York low, established trend, which was step 2, and then simply an entry model. We didn't find one here because this was so confusing, but we took one right here. And yeah, that's the trade. It's the system we trade on in every session. If you have any questions, guys, I'm in Discord, on X, on YouTube. Hope you guys have a great evening. Peace out.